Walt Disney Company's profits and revenue both came in higher than expected in the first quarter. You tell me what your headline is, because one thing that's getting a lot of attention is the number of subscribers that Disney has for the ESPN Plus streaming app.
Yeah, ESPN Plus fits into this kind of new direct-to-consumer strategy, and now they're even breaking it out as a direct-to-consumer segment. So it includes their new direct-to-consumer streaming offerings, the theme parks. And that's the direction Disney should be moving. ESPN Plus has really been their first foray specifically from Disney. They also have had that stake in Hulu. Now it's a bigger stake. And obviously, for me, I think what we all should be watching is Disney Plus, which is kind of getting kicked down the road later in 2019. They're going to debut some of the original content for it and some of the features at an investor presentation in April. I was anticipating Disney Plus to launch, which is their direct-to-consumer streaming offering, to launch earlier in 2019. Like, I was expecting that they would be ready to go as soon as they pull that content off of Netflix, which happened at the end of last year, that they would just be ready to launch that. But it's like, what? Seriously, you're waiting till the end of the year? That's a head scratcher for me.
Yeah, you're not the only one.
I know. You and Emily talked about it yesterday.
Emily and I talked about this, and you're absolutely not the only one who's looking at that and saying, okay. And, just to give a little bit more context, I mean, this is not the first delay that we've seen for this project for Disney. And look, I'm a longtime shareholder, so I'm willing to continue to be patient, and I want them to get it right. And if they get it right, then a year from now, 2-3 years from now, nobody's really going to care all that much that it came later in 2019 as opposed to earlier. But they really better get it right. The ESPN Plus, the streaming numbers, I feel like you could argue either way on the success of that, because on the one hand, it launched last April. They've doubled the number of subscribers. They're up to 2 million subscribers. That's nothing to sneeze at. On the other hand, it's hard not to just have the knee-jerk reaction to immediately compare that to Netflix subscribers. Yep. And just say, okay, 2 million subscribers.
And what's the price point on ESPN Plus? Are you
I am not.
Yeah, me neither.
I think I'm pretty sure it's single digits.
Yeah, I feel like low to mid single digits.
Yeah, like $6.99 a month. Maybe. Yeah. For some reason that number sticks in my head. I'm sure there's at least one listener right now who's yelling at his or her phone saying, "No,
you guys should know this.
You should know that." One thing that they have done, I think, pretty effectively, and it'll be interesting to see if they continue to do this, is they've pulled some pretty nice promotional levers to get people into the ESPN Plus streaming app. And I think that the bet that they're making there is a smart one, which is essentially, look, if we get people to try this, we feel like the experience is going to be good enough that they're going to stick with it. And then we just get that recurring revenue month after month. It's not a bad approach. And when you think about all of the sporting events that they've got under their umbrella, there are a lot of levers they can pull there.
Yeah, and I think an optimist would look at it, and I would put myself into that camp. I'm with you. I'm a shareholder, and I've been a little disappointed with just the pace of the change here. Yes. But I feel like they are moving the right direction with this focus on direct to consumer. So it's like, okay, with ESPN Plus, you have a couple million subscribers. It's a much lower price point compared to Netflix. But ESPN Plus is also more of a niche offering. And along with that, Disney Plus should have a much wider array of content. So once Disney Plus comes, that'll be able to be offered at a higher price point. I would hope within a couple quarters you would be able to get to 2 million subscribers with Disney Plus. Because Disney is being squeezed a bit now because they're no longer getting the licensing fees from Netflix for the content that they had on Netflix. So that's $150 million that Disney isn't getting right now. And then in the meantime, they're also investing in original content for Hulu, Disney Plus, and ESPN Plus. So they are going to be squeezed on an earnings level throughout 2019. Now, from a long-term perspective, these are absolutely the investments they need to make. But as a shareholder, you do have to be aware that, okay, this isn't going to be a year of earnings growth for Disney. 2019 will be a year of reinvesting back in the business, reinvesting particularly in these direct-to-consumer offerings. I was just surprised because I feel like by now they would at least have like a launch date ready for Disney Plus, but they're still being very ambiguous with that. So like you said, they do need to get it right. I feel like even if they do push this back further, the content is so strong and compelling there that they will be able to attract people. But I would just hope that they would be able to do it sooner, because keep in mind, Netflix launched the online streaming in January 2007. So Disney has just been very slow here, but better to be slow and get it right than rush it out and just botch the tech, botch the content. So for me, though, that'll be the main thing to watch through the rest of the year.
It will be interesting to see at that Investor Day in April if when they're unveiling some of the content, they also choose to share the launch date then, assuming they have it by then. One other thing, just sort of, this is getting a little bit in the weeds, but part of what we're seeing with Disney, and the stock is basically flat today. As it's been basically for the last 12 months. I mean, it's sort of in that 105 to 115 range. It has been for a while now. I think you're right that this is going to be a year of investment for them. But also worth noting that movie studio revenue for this quarter down compared to the previous year, because the previous year had a Star Wars movie, had Thor Ragnarok. You think about what's coming in the last 3 months of 2019, what's going to be baked into the earnings report in terms of the movie studios 12 months from now. You're going to have another Star Wars movie. Like, if they had a tough comp this time around, 12 months from now, it's going to be an easy comp. And I would go ahead right now and bet on them to beat that. Yeah,
this should be a strong year for movies, because we have the live action Lion King coming out this summer. You have Star Wars in December. So, and that's just like a fraction of the names.
Yeah, 2 Avengers movies coming in the next couple of months.
Those will probably do all right.
Yeah, they'll do fine.